Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. Several narratives are currently driving the market sentiment. First, President elect Trump's appointments. Investors are closely analyzing the philosophies of his appointees, trying to assess how they will influence future policies. Tariff uncertainty. Now, Trump's continued announcement of potential tariffs are being viewed as possible negotiation tactics to secure favorable trade terms. Third, geopolitics. A 60-day ceasefire deal between Israel and Hezbollah marks a significant geopolitical development, providing a temporary pause to regional tensions. And of course, the data released yesterday was Fed minutes, which suggests that Federal Reserve may consider moderating the pace of rate cuts or even pausing altogether in December if inflation remains stubbornly high. Good morning, JK. With today's durable goods and GDP data from the US on the horizon, do you think these numbers have the potential to move markets significantly, or would there be any other narrative markets would be watching out for?
Good morning, Swaraj. Yeah, it's actually a super Wednesday today, and we have the data lineup from US so much that it could well have been a data spread over 1 week. So I'll come to that later. But what we've seen in the last 2 days is markets swinging from the Trump trade to Besant trade. That is a new Treasury Secretary who is seen as a fiscal hawk. So there was a drop in the yields, and then quickly back to Trump trade after Trump indicated tariffs after he takes over office, and then again the yields have gone up, and the dollar also, started to gain again. Benchmark yields, which had dropped almost 15 basis points the previous day, again rose yesterday as much as 6 basis points. Dollar rallied across the majors yesterday, but in this end sustained only against a few, mainly the Mexican peso, which was weaker by more than 2%. And others are basically range bound. There seems to be a slight bias for lightening up on the dollar positions, as we have already seen a near 8% move since the low of September in the dollar index, and perhaps well priced in the Trump policies. And moreover, the negative impact of the export policies on US economy may not have been discounted, and hence the dollar is also undergoing possibly a correction. Euro in particular remaining resilient above key support of 1.0430, notwithstanding its foray into the 2-year low of 1.0333. But then yesterday's Trump announcements did elicit a lot of reactions from the countries. Europe, for instance, said that Euro should remain united and give a fitting answer to the changes taken by the new administration in US. Mexican president said he is, contemplating measures to, respond to the, imposition of tariffs. Bank of Canada said that the threat of tariffs on Canada would have an impact both on the economies, and the central bank would incorporate those into the economic forecast. So it's like people have actually been prepared for these moves, and as you also mentioned, the tariffs this time, actually are being seen as a point of negotiations with individual countries on various issues. For example, with Mexico, it is a point of negotiation for stopping the illegal immigration into US, and with Canada, it's also about the overall trade and the border issues. So I think market is now convinced that in some way or the other, the tariffs are not going to be as severe on the global markets without impacting the US economy. So therefore, markets are calming down a bit. On the geopolitical front, Israeli cabinet has approved the ceasefire for 60 days. and this is also well discounted. But important to note that Netanyahu said the ceasefire means that the conflict with they will now focus on Iran. So it's not that everything is settled and we are going to see. So that's why you see very limited reaction to the news of a ceasefire being approved by the cabinet. On the economic front, yesterday we had the US consumer confidence data that again improved in November, reaching the top of its last 2 years range. And a significant part of the survey was an improvement in consumers' confidence about future job availability. And also, a lot of this confidence, with the survey being taken on November 18, was influenced by the election outcome and people's confidence that the economy is going to do much better on the days ahead. Yes, coming back to the data points, today we have a whole host of data. The GDP from US for quarter 3 final revision, and then that's going to come at 2.8%. Then we have the jobless claims, weekly jobless claims, PCE core inflation, which is expected to come higher, durable goods orders, Chicago PMI, also personal income and personal expenditure. All of that, packed into one single session today. And of course, after that, we know the US also goes on in a long weekend, tomorrow being Thanksgiving holiday and Friday. In all probability, you don't see much staff in the dealing room. So it's almost like a weekend today, packed with a lot of action. So that's why markets are also on a holding pattern that we have seen in the last few hours. This is likely to continue till the US session ends, unless we see a big change in the data front. We're not likely to see a bigger reaction as well. Now, on the Indian side, we had the residual flow hitting yesterday on the rupee, taking it to 84.2350, and that proved short-lived because Nats themselves were seen buying back the dollars, probably replenishing their reserves, and oil companies were back in with their bids. And once it was on the bid side, steadily, we saw even the general importers jumping in and starting to cover their dollar positions as well. Now, from Indian macro point of view, we have the GDP number on Friday for Q2 of FY25, that is the July-September quarter, which is expected to come at 6-quarter low of 6.3%. And Q1 we had a 6.7% growth, and and comparable period, that is Q2 of FY24, was at a very impressive 8.1%. Yes, we have been hearing about some slowdown in urban consumption as well as some of the high frequency data in India. So it won't be a shock to the market, definitely, but definitely I think this is already been discounted even in the stock market, which has corrected by about 11%. But overall, I think along with the broader dollar, which is likely to get into a consolidation mode, because after this week, we also enter the December, perhaps the year-end market, where with a lot of expectations from the new administration, new policies, markets are unlikely to move out of their ranges. And in all probability, I see a correction lower in the dollar, particularly in currencies like the yen and perhaps the yuan also, and some EM currencies. Euro may be laggard because it's not just about the US policies or US strength. It's also because of the Eurozone's own problems of the political instability, and also the structural weakness, and even the cyclical weakness is not going away in a hurry. We also have Eurozone inflation numbers this week coming up, which will be very closely watched as far as Euro policy is concerned. For the rupee, I think 80 84.20 and 84.50 should mark for next couple of weeks, and then of course we will see if in December we do see return of more flows, and that can probably see the market going towards 84 as well. But looks like 84.50 will be safe for now. Thank you.
Thank you, JK. And I would just like to highlight a very nice quote you said at the start, that markets have been swinging from Trump trade to Besant trade and back to Trump trade. That essentially sums up the theme which has been going on in the market for the past few weeks, and that's I think that's the crux of it. Just a quick note on the data which you mentioned. US GDP Q3 final revision is going to be announced today. It's expected at 2.8%. There's jobless claims, there's PCE core inflation, which is expected to come higher, and then there's durable goods orders. So a lot of data before the long weekend, because tomorrow is Thanksgiving in the US and it is going to be a US dollar holiday. And as JK mentioned, because it is a Thursday, most likely Friday is also going to be, a sort of a slow day for the markets. And for rupee, we of course appreciated yesterday to 84.2350, but the central banks and oilers were constantly buying dollars, and it led to a close above 84.30. So 84.20 and 84.50, that's the range which was mentioned by JK. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.